Well, banking confidence has improved in the third quarter of 2012 after sharp falls in the previous quarter. This is according to a survey released by Ernst Young today. The survey found that confidence rose in both the retail and corporate segments of the market, banking confidence rising to 90 points, its highest level since the fourth quarter of 2007, and it's up from 78 index points in the second quarter. Joining us now for more on the numbers is Emilio Pera. He's Lead Financial Services Director at Ernst Young. Emilio, thanks so much for joining us today. Well, I must say, pretty surprising that we've seen such a jump in confidence levels within the financial services space. I mean, 78 to 90. What's providing the impetus here?
I suppose we have to look through the cycle, and in the beginning of the year and towards the end of last year, we did see a steadily increasing confidence levels. First quarter it was at 89 points, came down in second quarter and is back up at that levels, and that was largely driven through the retail banking, whilst investment banking has consistently remained more confident over the last year.
Emilio, if I'd had seen some of the findings without reading the headline, I would have thought, goodness me, confidence must have fallen, because these are some of your findings. I'm reading from the report that you kindly sent us earlier on. Continued rising credit losses in retail banks. Investment banks' losses are flat. So that's a negative to me. Tightening credit standards applied by retail banks, a good thing, but it means that they're lending less, so they're earning less. Contracting investment banking volumes across most business lines, that's also a negative to me. Strong headcount growth at retail banks and investment banks, good for the people whose heads have been counted, but bad for costs. So where does the optimism come from?
I suppose if you look at, if I can start with investment banking, at least the treasury and trading activities are still growing. The reduction is more in private equity, trade finance activities. So overall there is still a growth, although at a much slower pace. If you consider at a cost side, I do agree with you, definitely more negative signs that we're starting to see come through. But it is early indicators, so at this stage still not really coming through to overall profit levels, which is still showing a growing trend.
You've got to question just how sustainable a picture like this is, though, because, I mean, this is in a context where you've got a Eurozone crisis that's still largely remaining unresolved and very weak economic activity. We were chatting earlier on in the show about the IMF coming through and issuing a global economic downgrade on the growth picture moving forward.
Absolutely, and as I say, we're starting to see some early indicators come through, but going into the fourth quarter, if it remains, and especially if you look at our current economic environment and the strikes that we're seeing, that will have an impact on especially the lower income or low segment of the market and unsecured lending. It would be interesting to see the confidence levels, whether that is sustained through to the end of the year. But if you consider the half-year results of most of the banks, very positive signs that we've seen definitely locally, and it's large banks, large financial services sector. So if there's a declining trend, it won't necessarily come through in one quarter only.
Amelia, I don't want to be branded as a bank basher, but one of the last points that you make in your bullet points, you say higher retail banking profits despite slower income growth and higher cost growth. So they're making more profits despite the fact that there's slow income growth, as I said, and that their costs are going up. So therefore they must be extracting more from the poor man and woman in the street like me and Alishia.
What we're seeing is that the rate of growth is reducing, and cost growth is growing at a faster rate than income growth, but at the same time profit growth is still increasing. So the volumes are still there on the retail banking side, but definitely it's looking at it in a profitable environment, and therefore I suppose the fee income and interest income, especially if you consider credit extension, is still continuing, as you mentioned earlier. Credit standards are being tightened, but it is still a growing environment.
To what extent are you starting to price in risk here? Because, I mean, there's this overall concern at a macro level that we've got consumers that are over indebted, and with that, a lot of emphasis being placed on the rate of unsecured lending we've seen taking place in South Africa.
And if you consider from one of the largest areas of growth has been the unsecured lending, which is at a more profitable rate than your secured lending, and I suppose it's already pricing in the high risk environment. I suppose in looking at where we're currently at and the fact that that is continuing to grow, and the talk around a potential bubble or indebtedness, as you mentioned, of the consumer, I think it is probably also why you are seeing some tightening of credit standards in order to mitigate that risk.
Emilio, you make a very important point in one of your concluding paragraphs. You talk about GDP growth and how important it is, and we've got GDP numbers coming out from the South African economy quite soon. You say a lot depends on fourth quarter GDP growth, and also currently labour markets make for a very uncertain outlook. So what you're saying is that this confidence is backward looking, and given what's going on in the labour market and what might happen in terms of GDP growth, we can't expect this sort of confidence to continue in the next couple of quarters.
Definitely, if the current trend persists, and what we've seen historically as well, especially with global shocks that we have been seeing more of in the last couple of years with the euro crisis that you mentioned earlier, it is definitely going to impact on our local market as well. So I fully agree with your statement.
Historically, we've had South Africans pretty conservative in terms of just how optimistic they allow themselves to get. I mean, it still continues to surprise me that despite all that's going on, that we've got a more optimistic South African, or that's actually presenting itself here.
And you have to look at the underlying growth rate. I mean, the banks, as I said, if you look at the half-year results that came out, solid numbers, solid growth numbers. So we are at lowest interest rate levels for decades. So I suppose that is also providing some momentum for that growth. But to the point made earlier, whether that's sustainable, given the current economic environment, that remains to be seen.
The current economic environment has been going on for 3 or 4 years, Emilio, and our banks have been remarkably resilient. That is, I think, because of very strong management and very strong regulation from the authorities, from the South African Reserve Bank, from the Treasury, from the banking authorities. So it must actually, this sort of survey that you've come out with must actually shine when you compare it to our international peers.
Definitely, the South African market, which we've seen throughout the crisis, our banks, although even when our confidence levels were at its lowest, were still profitable, where most of your international banks made significant losses. And throughout the credit crisis, we've said it is based on our local regulatory, but also the banks being quite conservative in their outlook. I suppose going forward, we have to consider whether the growth is sustainable at the current levels, given the concerns that we expressed around the economic growth locally. But also, if you consider the Basel III implementation that becomes effective beginning of next year, we have seen that there has been significant cost pressure based on that. I suppose the one positive in looking at both retail and investment banks, we've seen a net increase in staff numbers, which is an indication that the banks are confident that there is growth in the segment.